So SDI is an interesting company. It's still very much under the radar of most investors, but it's a real Australian success story. Its current market capitalisation is just over 100 million, so it's still a relatively small company. It's a manufacturer and exporter of dental products, fillings, cements, whitening products, and various other dental equipment, all produced from their manufacturing facility just outside Melbourne. It is Australia's largest dental manufacturer, and it today exports over 90% of its product to over 120 countries around the world. It has market-leading positions in a number of those geographies and is well positioned to further grow sales over the next 5 years. So SDI was established in 1972 by Geoffrey Cheetham, actually in his home garage. People started producing dental amalgam fillings and selling those fillings direct to dentists. Within 3 years, he had taken the business offshore and had operations in America, Europe, and New Zealand. The business continued to expand over the next decade, both nationally and internationally, to the point in 1985 he listed the business on the ASX under the name Southern Dental Industries. So it's been listed on the ASX for a number of years now, and has a strong track record of profitability and bringing innovative new products to the market. SDI has built its reputation as a supplier of high-quality amalgam products. That's a traditional silver and mercury-based products. However, consumer preferences have changed over the years to the point where people are after more visually appealing products. That's impacted SDI's sale growth over recent times as the market has moved away from their traditional amalgam products. In recent years, though, SDI has focused on the more attractive composite and non-amalgam products. And that product mix transition has been successful to the point where today the traditional silver amalgam-based products only comprise approximately a third of SDI's total sales. So we're starting to see some real benefits of SDI's product mix transition from the traditional amalgam products to the non-amalgam products, and that's supported some very pleasing results for the year for SDI. Sales were up approximately 8% to 74 million. EBITDA was up 25% to over 15 million, and net profit after tax was up to over 20% to 7.6 million. Its balance sheet is in the best shape it's ever been, with minimal net debt, and the cash flows have been strong and have supported an increase in dividends to the extent of over 40%. Looking forward to 2017, management are confident that the growth in non-amalgam products will continue. They're forecasting growth in excess of 10% for the non-amalgam products, and the traditional amalgam products are looking as though they'll be stable over the next 12 months. Yeah, so SDI generates very high gross margins, in excess of 60%. This is the result of the highly complex manufacturing processes that are required to produce these products. Very technical, very high margin, and provide SDI with lots of operating leverage, which means that as revenue increases, SDI's net profit after tax is able to increase at a much faster rate. As I mentioned earlier, all of SDI's products are manufactured at their Melbourne-based manufacturing facility. There is significant excess capacity at this facility based in Melbourne. Last year, SDI reported sales of approximately 74 million, but they believe that the manufacturing facility has the ability to generate sales in excess of 120 million. And some basic modelling would suggest that if they were able to get sales up to 120 million, then the net profit would be close to $20 million versus the $7.5 million they reported for the last 12 months. So there's significant operating leverage inherent in the business, and then we find that very attractive. Sales growth is going to continue from the non-amalgam products. SDI continues to invest heavily in research and development and expanding their product portfolio The management are excited about 2 new products that they'll be bringing online in 2017. And we believe that this development of the of SDI's product portfolio will offer significant sales growth opportunities over the next 5 years. Despite a large share price appreciation in recent months, we believe that SDI's valuation metrics are still attractive based on forward multiples, and that there's still significant upside in its share price as the market becomes more aware of the opportunities that the business has ahead of itself.